Hello, and welcome to Becoming a Registered Journalism Organization. My name is Benjamin Miller. I'm a lawyer who helps nonprofits and charities in Ontario, Canada. And I'm producing this video to help, in particular, journalism organizations, news organizations that are nonprofits who are interested in this new status, registered journalism organizations. It's a status under Canada's Income Tax Act that allows journalism organizations to issue tax receipts to their donors. So that gives their donors tax deductions, tax credits, and also it gives them the ability to receive funding from other special entities under the Income Tax Act called qualified donees. And we'll describe what that means, but in short, basically you can apply to foundations for funding and other kinds of organizations like that. The approach we're going to take today in explaining how an organization can become a registered journalism organization is I'm actually going to walk you through kind of paragraph by paragraph the information available on the Canada Revenue Agency website, because the process, could be intimidating. You could get lost in the weeds and the details, not knowing what's important, what to focus on. There's a lot of language there that is particularly clear. So I thought it might be helpful to actually go through the guide with you so you feel supported, particularly if you cannot afford a lawyer to do the process for you, which is the situation for most organizations, particularly grassroots community organizations. So I'm going to start probably where you might start if you are interested in becoming a registered journalism organization, which is with the Google homepage. So I'll start by Googling registered journalism organization. And the first result you get is list of registered journalism organizations. That's because for the organizations that apply to the Canada Revenue Agency and qualify, so they get the status, yay, one of their obligations, because they're receiving public subsidies in the form of being able to issue tax receipts, is there's an increased level of accountability. Their names and certain information about them gets listed on the Canada Revenue Agency website. So that's what this list of registered journalism organizations is. It's the people who have already qualified, the organizations who have already qualified. But I'm going to click on the second web page. It's an introduction to registered journalism organizations. It gives you the basic criteria an organization needs to meet in order to qualify, the limitations in terms of who you can receive money from. RJOs are set up, and I will use the term RJO because that's the term the guide uses. RJOs are set up so they can't be controlled by any one organization or person because they're supposed to be producing news, reliable news, not just advancing some person's view. The obligations of an RJO. So once they qualify, that's not the end of the story. There are all kinds of rules they have to follow. The form that an organization needs to fill out to apply, and then the consequences if they do not follow the rules that apply to RJOs. So that's what's on this overview page. But the link I want to call your attention to is this one right here called Guidance on Income Tax Measures to Support Journalism. So the first thing I'll note is when you click on the link, it takes you straight to section 5 of the guide, Registered Journalism Organization Requirements for Registration. Now, that's already misleading because in fact, to qualify as an RJO, you need to go through a two-step process. First, you need to apply and be accepted as a qualified Canadian journalism organization, a QCJO. And a lot of these terms are mouthfuls, I know, which is why the acronyms are helpful. But first, you need to be a QCJO. And then once you're a QCJO, then you can apply to an RJ to become an RJO. That's why this is only section 5 of the guide. So we're going to go right up to the front of the guide. Okay, we're going to take a look at this nice detailed table of contents. It gives us a lot of the subsections, so it can seem a bit intimidating because it's a bit long, but it's actually quite helpful. A lot of these are short sections. And so today, in today's session, we're going to discuss the background section. I'm going to go through section 2, the QCJO section, how you become a QCJO. I'm going to skip section 3 and section 4, but I'll tell you a bit about those right now. Section 3 deals with Canadian journalism labor tax credit. So that's certain tax credits for your employees, newsroom employees. So that can be useful. Number 4 is a digital news subscription tax credit. So that's for subscribers to digital news subscriptions. The individuals who subscribe can get a tax credit. So that can be a useful thing to be able to tell your consumers about that they can apply for, but it's not the focus of today's video. And then finally, section 5 is the RJO section. So we're going to talk about section 1, 2, and 5. So let's get started. Background. So the guide starts by explaining that in federal budget 2019, the government of Canada introduced 3 income tax measures, and we've talked about these already. There's the labor tax credit, there's the personal income tax credit for subscribers, and then there's this idea of extending eligibility for registration as a qualified donee to registered journalism organizations. So already we need to pause. What's a qualified donee? Why is it so great to have this qualified donee status? So you may have heard the term registered charity thrown around. A registered charity is a charitable organization. So that means an organization whose purposes are exclusively something like educational or religious or relieving poverty or some kind of benefit to the community like animal protection or protection of the environment, something like that. So these organizations then apply to the Canada Revenue Agency, and then if they're accepted as charities, they become registered charities. And then registered charities have the ability to give their donors tax receipts, and they have the ability to receive funding from other registered organizations, such as foundations. Registered charities are an example of a broader term called qualified donees. This broader term are just all the other types of entities that can issue tax receipts to their donors and receive funding from other qualified donees. It includes things like the United Nations and its agencies, universities outside of Canada, if they have a certain number of Canadian students consistently, municipalities, and entities performing a function of government, such as band councils under the Indian Act. Those are all just examples of qualified donees. So the registered journalism organization is a new type of qualified donee. So it gets to join this exclusive club. And section 1.2 talks about how if you want to be eligible for any of these benefits, you need to first qualify as a QCJO. Remember, I told you it's a 2-step process. QCJO status is the first step, and we'll talk about that soon. So that's the essence of what the practical side of what you need to take from section 1, the background. The last thing I'll note is you may wonder what qualifies the Canada Revenue Agency to be judging journalism organizations. Are the accountants and tax people at the CRA somehow journalism experts all of a sudden? The answer is they are not journalism experts, which is why they have the benefit of an advisory council, the Independent Advisory Board on Eligibility for Journalism Tax Measures, who actually reviews the applications that come into the CRA and then make a recommendation to the CRA about who should qualify. So you can learn more about that advisory board and who's on it. Basically, it's journalism industry professionals of various kinds. But that's who's kind of making or advising on the decision behind the scenes. Okay, so now we get to section 2, Qualified Canadian Journalism Organization Designation. So how to apply. So there's a form here, T625, and you can mail it in, or you can use the online My Business account, which is a whole separate video, but your organization can have an account online with the CRA and file it that way, or you can just mail it in over here. The first thing it notes is that the advisory board's recommendation, so remember, it's not just the CRA making the decision, it's the advisory board. So what can the advisory board take into account? It's mainly the elements of the legislation dealing with original news content. So they're not considering all aspects of your application. They're dealing specifically with the question of what counts as original news content, what count, have you met the quality journalism standards that need to be met in order to qualify as a QCJO. So whenever we talk about quality journalism standards, original news content, and you're saying, well, what does that mean? Who defines that? The answer is the advisory board, who are supposed to be the experts in the room. That's who defines that. Okay, so let's jump into the substance. Who is eligible for designation? So I'm skipping over these paragraphs because they kind of give a bit of detail about the powers of the CRA to delegate authority. You don't really care about that. You may care a bit about 2.6. It tells you that if you're unhappy with the decision the CRA gives back to you, let's say they deny your application, there's no official right of appeal in the Income Tax Act, but the CRA will reconsider its decision if you ask within 60 calendar days. I should note that it's a general principle in what's called administrative law. This is the law that governs citizens' relationship with administrative decision makers like the Canada Revenue Agency, that you can ask for judicial review in most cases. And judicial review means, despite the fact that the Income Tax Act says, it doesn't say anywhere that you have an appeal right, if you believe that the CRA has made a fundamental mistake about the law that applies in this area, or a mixed error of fact, but the facts in your case and the law that applies in this area, or some kind of fundamental mistake about the facts, you can go to a court and you could say, I would like this reviewed. And in most cases, that right is there. So 2.6, while it's true what 2.6 says, if you think it is worth it, if you think an injustice has been committed, you're not completely out of options. And it may be worth it at that point to consult with a lawyer. Yeah, so I'll just highlight that as preliminary, but that's really the worst case scenario. That's after you've been rejected. Let's focus on how to qualify for now. So eligibility for designation. So 2.8 talks about subsection 248.1. So whenever it's talking about a section or a subsection, it's talking about the Income Tax Act. So that's where you're looking. And in case you didn't know, you can always Google Acts of Parliament, and they're available online. So you can Google the Income Tax Act. You might want to put in Canada for good measure, and you can actually find that law online and read through it. It's not a very compelling read, but it's there for you. And subsection 248.1 is the definition section. It won't give you a lot of detail. Laws are pretty general. But it gives you different requirements for qualifying as a QCJO. The first requirement is, how are you structured as an entity? So let's pause and reflect for a moment where you currently are as a group. There are a few options. You could be a grassroots group, just a startup group. You don't have any official legal status. You haven't taken any kind of steps to formalize your structure. You're just a bunch of people that reports on some kind of issue area, or you report for your local community or something like that. Okay, so typically your situation will be you're an unincorporated association. Now, if you were to incorporate under either federal law or provincial law, so in Ontario, that means the Ontario Not-for-Profit Corporations Act or the Canada Not-for-Profit Corporations Act, and we're only talking about nonprofits here for the purposes of becoming an RJO, right? That's what's called a corporation. So in order to be eligible for RJO status, you can only be either a corporation or a trust. You can't be a partnership. So I'm not going to talk about partnership, but basically partnerships are for profit, where people get together without incorporating with the goal of some kind of profit. So we're talking about nonprofit entities. What's a trust? So that's the other alternative. So one alternative is you incorporate as a nonprofit. The other alternative is you create a trust. What's a trust? A trust is where funds, money, assets, property is given over to one or more individuals or even an organization who agrees to use that property not for themselves, but for the benefit of a third party or for the benefit of a purpose. So for example, you can go to your friend Bob and say, hey, Bob, take this property and distribute it to poor people in our area. And so that might be what's called a charitable trust. And you can create a formal legal document which will set out the rules, what are Bob's powers, who counts as poor, what counts as the area, etc. Right? So those are your two basic options for how you structure yourself, either as a corporation or if you don't want to incorporate as a trust. So it explains that the corporation must be incorporated under the laws of Canada, a province or a territory. So if you're watching this from some other country, you should know there aren't necessarily residency requirements to incorporate in Canada, but there are going to be some residency requirements to qualify as an RJO, as a QCJO, and then as a result an RJO. The corporation must be resident in Canada, so the corporation itself has to have an address somewhere in Canada. Although again, its directors don't necessarily have to incorporate, but they might to meet the RJO status definition. And so here, at least 3/4 have to be Canadian citizens. And the same thing for the trust, at least basically 75% of the fair market value of all interest as a beneficiary under the trust must be held by individuals who are citizens of Canada. So what does that mean? Basically, what you're going for is that if you have a mix of people, some of whom are Canadian citizens and are resident in Canada, and some of whom are not, you want 3/4 of the people with control, or 3/4 of the people who are entitled to have an interest in the property. You want them to be Canadian citizens and resident in Canada. And the organization itself should be operating in Canada, and was operating means. So you could say, well, look, we're publishing on the internet and that's international. So does that ruin our ability to be operating in Canada? No. But you know, if you're reporting about Canadian news, if you're taking steps, let's say locally to advertise in other place-specific ways, if you have your offices in a place in Canada, you know, all of these things are part of operating in Canada. None of them is necessary in and of itself, but the idea is your focus should be within Canada. Okay, and so now we come to the big question and the big difficulty in qualifying. What is original news content? So the definition of QCJO, this is section 2.23, the definition of QCJO requires that the organization be engaged in the production of original news content. So the panel, the experts from the journalism industry that the CRA got to advise them set out a few criteria which are described below. And firstly, the idea is that the organization needs to demonstrate a commitment to producing original news content on an ongoing basis. It can't just be a one-off project. It has to be the ongoing business of the organization. It can't be that most of the time the organization is selling shoes, but it thought, you know, wouldn't it be a great idea if once a year we produce this great newspaper for the local community? That is not, although you're producing original news content, that is not enough to qualify as a QCJO. It has to be a regular business to do that. Neither the legislation nor the CRA has set the amount of original news content. So that's for QCJO, but spoiler alert, to qualify as an RJO, we're going to read later, you need to be producing at least 51% of your activity needs to be original news content. How exactly that's defined is a bit fuzzy. So does it mean like 51% of your budget is going towards the production? Does it mean that if you have a newspaper, 51% of the page space is covered by original news content? It's a bit fuzzy what it means. So it might be prudent to err on the side of caution and have a whole bunch more than 51% of your content be original news. But in general, the rule is a majority of what you're doing should be producing original news content. So what does it take to produce original news content? Well, first and foremost, it can take the form of reports, features, investigations, profiles, interviews. So it's not so much the medium, right? It could be a short format, long format articles, deep dives. It can be daily, weekly, and so on. But the key here is that it's news. It's written. Okay, so not videos, written, researched, edited, and formatted by and for the organization. So you are doing the primary work. You're not just taking stuff that other people have done and changing it a bit or translating it even or reproducing it. All of that is good and valid stuff, but it isn't producing original news content. The content needs to be based on facts and multiple perspectives, actively pursued, researched, analyzed, and explained by a journalist for the organization. So it's not just putting out your opinion. It's not a blog. You're as difficult as it is in our times to believe that anybody is being objective. Nevertheless, the aspiration of your content and your methods have to reflect an attempt to be objective, an attempt to capture multiple points of view rather than to advocate for a particular point of view or to merely express opinions. That's not to say that you can't be wrong from time to time, as journalists are, but that you took all kinds of reasonable steps that are expected in the profession of journalism to make sure that you didn't get it wrong. Then you can be forgiven. But if you're actively propagating what's called fake news, or if you're just propagating opinions, or you're just advocating for a particular perspective and applying that perspective to whatever facts come your way, that is not original news content for the purposes of the QCJO definition. And all of that I've just described is kind of caught under the broad heading of produced in accordance with journalistic processes and principles. Very vague term. Again, it's the kind of thing that they have the expert panel there for, but basically is your methodology of how you're researching and writing and producing your content, is it the industry recognized methods to make sure that you got it right, that it's reliable, that it's fair and balanced in how you've presented whatever you've presented. Now, the term news generally refers to new, factual, and important information. And so here's a brief pause. What does that mean, important? Right? You might feel that what's important to you is different from what's important to the next person who is the CRA or some panel to decide what's important. Generally speaking, what they mean is of public significance, meaning that somebody who isn't in any direct way connected to the story may nevertheless have some interest or stake in what is going on. So for example, important things may be happening within a company, but if all you ever report on is in the company, the audience you're speaking to most directly are the people in that company. On the other hand, if when you report on the company, you're only reporting on those things that will have wider effects on, let's say, the surrounding community, if they're polluting, for example, or if there's a financial scandal, it'll affect not only the investors in that company, but the broader market. That's an example of how not only the people who are directly involved are affected. So that kind of way of looking at it isn't written down anywhere, but it's just a distinction I find helpful in thinking about the public significance of the information that you are relaying. Again, it can take the form of reports, investigations, interviews, analyses. It doesn't include advertisements, listings, catalogs, directories, guides, financial reports, schedules, calendars, timetables, comic books, cartoons, puzzles. So basically anything, all the other stuff that would come in the traditional newspaper, either wrapped in the newspaper or the comic section of the newspaper. All those things are great. You can have them, right? As long as you're meeting your majority requirement that the majority of what you're producing is original news content. Those things are not the news, though they can come with the news. So like I said, the news content must be primarily focused on matters of general interest and report current events, including coverage of democratic institutions and processes. So part of the policy rationale for these benefits in the Tax Act is that the recognition that having a healthy news industry is good for democracy. It's good for the accountability of governments and various decision-making entities. So when we think about, well, what is a democratic institution and process, what kind of news counts for the purposes of this tax measure, well, ask yourself, are these organizations making decisions for lots of people? Is it important that by reporting to the public, they will then be better able to hold those decision makers to account? Because that's kind of the underlying theory of this policy, that's what good news will be able to do. So more specifically, 2.30 says general interest means news content that is aimed at a general audience as opposed to a specialist audience field, industry, or field. Content should be diverse and include a variety of content such as local news, national news, international news, social issues such as health, education, faith and ethics, business and economy, sports, and so on. So the idea here is not that you cannot target a specific community. So for example, your news organization may be specific to a local area, or it may be specific to a cultural community, an ethnic community, a faith community, etc. That's all fine. In fact, part of what this policy is encouraging. But in the content you produce for them, it should be general in scope. You shouldn't be specialized. Your writing should reflect that it's for a general audience, rather than using a lot of jargon, a lot of technical terms that wouldn't be accessible by a general audience. And it's not that you can never use technical terms. Again, I should mention that this guide produced by the CRA is not binding. It's all just meant to be helpful. So this isn't the letter of the law. It doesn't say anywhere in the Income Tax Act you cannot use technical terms, you cannot use jargon. Rather, what the CRA is looking for in this application process is that you've got a generally accessible orientation. It's clearly for the public. Too much jargon, too much technical terms, that will indicate that you're speaking more to a specialized audience. So to make the process easier for yourself, you might want to avoid even getting those questions. 2.31, an organization that produces content focusing primarily on industry-specific content, trade journals, travel magazines, sports, or entertainment news, not considered to be engaged in the production of original news content for QCJO purposes. So you may be offended by this. You may think, oh, well, entertainment and sports and so on, that's all very important. It may well be very important. It's just you have to keep in mind, what is the underlying policy behind these changes to the Income Tax Act? They're trying to ensure there's a healthy kind of news sector around governmental, public institutional decision-making. And so here it gets more into detail about what counts as democratic institution and process, including elections, municipal or federal, candidates running for office, federal, provincial, territorial laws, government budgets, government decisions relating to public assets, and so on. So this general idea is that if somebody is making decisions on behalf of the public, whatever the form of that institution takes, and should, in principle, be accountable to the people for whom they're making decisions, that's kind of what the idea of news is trying to capture here. So the term original news content includes content for which research, writing, editing, and formatting are conducted by and for the organization. Therefore, whether news content is original depends on the active involvement of a journalist in its creation. So a journalist here, again, who counts as a journalist, basically somebody who in their training, either formal academic training or in their personal experience, is using the methods that are considered professional standards in the journalism industry, in their research and also in their writing and in their editing and so But what does that mean in general? It means that the news content is produced through gathering facts and should show evidence of firsthand reporting, such as independent research, interviews, and fieldwork. So you're not just taking what other people have done and reiterating it or re-articulating it, giving it a different spin. You're doing some of the legwork yourself. That's who this policy is meant for. And it's based on the firsthand knowledge that journalists gain by conducting independent research. Again, you're not just dependent on somebody else to do the work, you're doing the work yourself. Talks about what we've already talked about, all the things that don't count, rewriting, translation, etc. You're doing the work, the original work, the firsthand work yourself. 2.36, original news content should be based on journalistic process and principles. So what are some examples of those? Commitment to researching and verifying information before publication, consistent practice of providing rebuttal opportunities, honest representation of sources, a practice of correcting errors. So basically all those methods that are to ensure the reliability of what you're producing at the end of the day. It doesn't include solicitation, design, or production of advertising, so that's not journalism. Advertorials, not journalism. Stories produced primarily for industrial, corporate, or institutional purposes. So again, this idea of producing like an in-house newsletter for an organization or a trade journal, that's again just for the industry, or it's for a group of specialists. That's not what we're talking about here. We're talking about general interest stuff for a general audience. And it's the advisory body who's deciding on these things, or at least advising, making recommendations based on these things. Ultimately, the decision rests with the CRA. Now, there's a requirement that a QCJO regularly employs 2 or more journalists. So this gets into the question of what does employ mean, what counts as 2, and the question we've already touched on, who counts as a journalist. The first thing to note is that the journalists, we've already described what counts as a journalist, but these people need to be arm's length with the organization. This is one of those terms you'll see a lot of places on CRA products. So what does it mean to be arm's length? Basically, it's pretty nuanced, and this guide links to other guides where you can read more about it. Basically, arm's length means that they're not related to the people who control the organization. They do not control the organization themselves. They do not have a financial interest or stake in the organization. For example, they're a major donor, that kind of thing. They are separate. They have separate interests, so you can rely on them more or less to not be colluding with the organization. So that's generally the goal that the Income Tax Act is trying to get to when it says a person has to be dealing at arm's length, that they represent a separate interest. So these 2 journalists have to be at arm's length. They need to be actively pursuing, researching, analyzing, explaining, editing. So they're the ones doing the work. And for clarity, regularly employees doesn't mean that they have to be there 24/7. And it doesn't mean that, if you have 2 positions open and somebody quits, that's fine as long as you fill that position in a timely way. But it doesn't mean freelance journalists. So it's people who are regularly employed. In the same way the organization has to be regularly producing news content, the people there responsible for regularly producing the news content have to be there on a regular basis. So just paying people contract to contract, which is very common in the journalism sector, is not acceptable for the purposes of qualifying for QCJO. Now, I should mention, it doesn't mean you can't use freelance journalists. If you have your 2 core journalist staff, you can then contract out, you can freelance, and so on and so forth. It's just that you need these first 2 journalists employees as a start. And so the idea that the journalism organization themselves have to have a relationship of employer-employee, there's lots written about that. So if you Google employee versus contractor, you'll see what are the kind of indicators the Canada Revenue Agency is looking for to distinguish between an employee and a contractor. So even if you have an agreement that calls them an employee, or what's more often the case, an agreement that calls somebody a contractor, the CRA looks, well, are they actually an employee or are they actually a contractor, regardless of what name you used for it? Though that may be a contributing factor. So section 2.44 to 2.48 gets into more detail about what it means to be arm's length, and we've already talked about that. The idea is you want the journalist to have separate interests from the people. You want there to at least be two journalists who have separate interests from the people that control the organization. And if the organization changes its structure, so remember I mentioned you could be a corporation or a trust. Let's say you want to become a corporation. You're a trust that wants to become a corporation, or you start out as an Ontario corporation, you want to become a Canada corporation because you're expanding the scope of your work or something like that. You just need to fill out a form and tell the CRA about the changes and make sure you still qualify. The last two paragraphs in this section, effective date of QCJO designation. So this is there to basically, you might be interested if the timing of the tax receipt you're issuing really matters, or if you're an existing organization that's going to then transfer its assets to the QCJO, so you're a for-profit turning into a nonprofit, for example, the time may really matter for tax purposes or something else. So 2.54 just talks about the effective timing. And revocation is that, so when they first put out the act with all these provisions in them, they didn't talk about the possibility of an organization losing its status as a QCJO. So that was just an oversight, and they have since added a provision that makes clear that once you get it, you have to keep qualifying at all times. You meet the criteria we just described. Otherwise, you can lose it. Okay, so that brings us to the end of section 2. So we're going to skip over section 3 and section 4. But again, I encourage you to read it if you are interested in this area. So you can see there's a lot of great detail here, but often it's trapped in the unfortunately opaque language that the CRA uses, because it's more it's safer to use more legalistic language, because then it follows the act much closer. It's less open to interpretation. Fewer decisions have to be made about how to translate certain ideas. So what I'm telling you here is kind of less precise. It's more to give you the general picture so that you understand it, rather than giving you legally precise and 100% accurate definitions of what does arm's length mean, for example, what's a qualified donee, etc. I'm sort of leaving it to you to go and do some of the reading yourself to get out the details, but with this background to help you. So I should have mentioned this at the very beginning. None of this is legal advice. It's only meant as general legal information. If you do start engaging in risky decision making, it might be a good idea to consult a lawyer. But since I appreciate that most people cannot afford, especially when they're a startup, grassroots, or small or struggling organization in the news sector, this is meant as kind of an aid in replacement of a lawyer to the greatest extent possible. Okay, so now we come to section 5, registered journalism organization requirements for registration. So you've qualified as a QCJO, you filled out that form, you sent it into the CRA, and you qualified. So you can either separately, or I believe it's possible to fill out one form applying for both statuses at the same time, but I believe it's two separate departments anyway. You then apply for registered journalism organization status. So what are the requirements above and beyond what we already described under the QCJO section? Well, the first thing that this section does is it describes the sections of the Income Tax Act that you can look to for definitions. Again, they can be quite opaque, but here they are. It can be helpful to look at what the actual wording is. I should note this section in particular, content of receipts, which is in the regulations of the Income Tax Act. So once you've become a registered journalism organization. Well, why did you become? Probably so you could be able to issue tax receipts or to receive money from other qualified donees. Well, you want to start issuing tax receipts then. You should know that one of the biggest compliance obligations that you have, one of the biggest things that you then have to keep track of is issuing receipts in the correct form. So you'll want to know, what does a good receipt look like? The CRA website has some information about that, but you can also look directly at the income tax regulations, section 3501, subsection 1. So that's where you can look at for more detail on that. So it gives you an overview, a bit of the background we've already covered. It talks about how becoming an RJO is a two-step process, and we've already covered the first step. An RJO's registration may be revoked if no longer meets the eligibility criteria. So we've discussed that already. It describes the form. You'll notice it's the same form referenced in the first section. And here it mentions the RJO application can be submitted to the CRA with the QCJO application, so you can apply to both at the same time. Okay, then it gives a summary of eligibility criteria. So let's look at some of these. So it must be a corporation or a trust that has been designated as a QCJO. So we've already talked about what a corporation and a trust is. Again, you can't be a partnership because that's a for-profit entity. It must be constituted and operated for purposes exclusively related to journalism. We're going to get into the details in a bit, but what I want to say now is that constituted and operated for. Constituted means that you're governing documents. So that might be your trust document where you set out the purpose of those assets, or your articles of incorporation. If you're incorporating a nonprofit, you may also know it as your letters patent. So your founding documents say that your purpose, your overarching purpose, is journalism, is to do journalism. You can add other purposes, but they all have to feed to that overarching purpose, which is journalism. And those other purposes will be accepted to the extent that the CRA finds, as a matter of law, that they do actually support your journalism purpose. That's constituted. That's if you get the documents right. But having good documents is not enough. You need to be operated for purposes exclusively related to journalism. So that's are you actually carrying out your day-to-day activities for the purpose of doing journalism? So don't think just because you've submitted great papers, that's enough. You need to actually show how are you going to put them into practice. If you have any business activities, and that basically just means charging for stuff. It's a bit more complicated, but again, I'm here to give you the high-level big picture. If you're charging for stuff, then you need to show what you're charging for and how you're charging for, and all the kind of business decisions. It all feeds into your overarching purpose, which is to do journalism. Your trustees or your board of directors, so these are the people who are either in charge of the trust or are in charge of your corporation. They need to deal at arm's length with each other. Remember, arm's length means they have separate interests. They're not family members with each other. They aren't in business together. They have separate interests from each other, because the goal is not for this organization to represent some special interest. It's to be a general kind of public service, like a general news organization. It cannot be controlled directly or indirectly in any manner whatever by a person or group of persons that do not deal with each other at arm's length. Independent news, as objective as reasonably possible. That's the goal. And to even reinforce this point even further, it cannot accept gifts from any one source that represents more than 20% of its total revenue. So arm's length, not dealing at arm's length, it traditionally would mean they are exercising either alone or with other people a controlling stake in the organization. So let's say they're donating more than 50%. Or here, it goes even further in saying you can't even have one source that controls more than 20%, because that would be too much influence over your journalistic direction. And finally, no part of its income can be payable to or otherwise available for the personal benefit of any proprietor, member, shareholder, director, trustee, settler, or like individual. The basic point here is that you need to be nonprofit. You need to be legally nonprofit, and you need to be in practice nonprofit. So that doesn't mean you can't pay people. They can earn a salary for the work they put in, but they can't be entitled. Nobody can be entitled to dividends or to the assets of the organization if it winds up. All those assets should be going to other organizations that are qualified donees, ideally. That's who is entitled to the property. People can be paid though. And finally, it is primarily engaged in the production of original news content. So not just regularly engaged, but primarily engaged. So we already talked about being a corporation or a trustee. The RJO can be a federal or provincial or territorial organization or trust. So now let's jump into the purposes. So an RJO must be constituted for purposes exclusively related to journalism. This means that it must have stated purposes in its incorporation or trust documents, and they must all relate to journalism. So you want to spell out as clearly as possible in your founding documents how your purposes are all related to journalism. If you're not using the word journalism in any given purpose, you need to be ready to explain how, despite the fact that you didn't use the word journalism, it's still connected to journalism somehow. So it's not impossible, but you need to always have a rationale. The RJO must also be operated to further those purposes. So again, it's not just what your documents say, it's what you do in practice. And an organization with a mix of journalism-related purposes and other non-journalism-related purposes will not qualify. So just to clarify, because what this means is that if you have a purpose, which is ostensibly non-journalism related, let's say you have a purpose that says to manage all the properties of the organization. Well, that's not inherently journalism related, but it does support and feed into your overarching journalism perspective. As long as you can build that connection, that's the essence. But if you have a purpose that says, yeah, 9 of our 10 purposes are to do news and journalism and so on, but also we run a little league. And maybe if it's even a small part of your budget, nevertheless, that means you're not exclusively operating for journalism. The RJO must use its resources, financial, personnel, and property to further its journalism purposes. So it's not just about what you do with your money, it's about what you do with everything. What do you do with your name? What do you do? Who do you let use your space? What are your staff doing while they're being paid? You have to make sure all of that is feeding your overarching journalism purpose. And so what the CRA really wants to communicate here is that they will ask about your actual activities. So it can be simpler in some ways for organizations that are completely new, because then you can just describe what your activities are going to be. But for organizations that are not new, if you have any activities you've done in the past that weren't clearly related to journalism, you're going to have to be able to give the CRA a very good explanation about how they really did connect to journalism, or how that's not going to happen going forward, and why they should believe you. The goal of an RJO is to focus not just on journalism in general, but on producing original news content, that aspect of journalism. Complementary content normally associated with producing and publishing news content could also be acceptable. So again, this is the idea of the funny pages, the ads, the calendars, and so on. All of that, it could be fine as long as it is there to support and promote the journalism. So for example, newspapers would include comics. Why? Well, it drew more readers and so on. So you end up having more people reading the news. Here they use the language of must remain subordinate to producing and publishing news content. But it just means that everything should feed and support that ultimate goal of getting more journalism content out there. They provide some examples of complementary content, financial reports, listing guides, calendars, etc. This reflects the list that was given in section 2 as being what isn't itself news content. An RJO may carry on business activities. Remember, you can't be for profit, but you can still be earning a surplus on your activities. The goal that this tax credit, these tax benefits of being a registered journalism organization is supposed to support is a financially viable original news content producing organization. So by all means, engage in activities that make you financially viable. But those business activities need to be for the purpose of making an organization which produces original news content viable. It's not enough that you take the money that you get from some business. Let's say you have a business selling cars on the side, you operate a car lot, and you say, well, look, we take all the money from the car lot and we put it back into our news producing business. That's not enough. The character of the business needs to be tied up in the news production. So for example, selling ads that are a smaller part of the broader news product. That would be an example of a related related to your journalistic purposes business. So here it says a business activity will not be considered related simply because it generates profit that the organization can use to fund its programs. The organization must be able to demonstrate the link between the business activity and its purposes. And I should note here that for registered charities, so you might look up, what's a linked or related business. So registered charities have a different set of rules that apply to them of what constitutes a related business. Registered journalism organizations are different. They have a different set of rules that apply to them, and it remains to be seen in practice what kind of business exactly will be accepted as linked to journalism purposes. But here are a few examples. The sale of news content, advertising, and subscriptions are examples of business activities that would be considered to be related to journalism. There may be other business activities related to journalism. Basically, the CRA's job is to be cautious, and they're going to take it on a case-by-case basis. So now we get into a technical paragraph, which I'll discuss briefly, only so that you shouldn't be bamboozled by it, because if you're not familiar with partnership law, you won't get what this paragraph is saying. 5.14, an RJO can hold an interest in a partnership and it will not be considered to be carrying on a business activity if it meets all of the following conditions. Number one, the RJO's liability as a member of the partnership is limited. Number two, the RJO and all non-arm's length entities collectively hold 20% or less of the interest in the limited partnership, and the RJO deals at arm's length with each general partner of the limited partnership. So I mentioned earlier, what's a partnership? It's where two persons, so either individuals or corporations, come together for the purpose of pursuing a profit. Now, there are two kinds of partnerships, generally speaking. There are a few more, but generally speaking, they fall into two sorts of categories. There's a partner, like a general partnership, so just partnership, where all the partners involved are liable for the work being done collectively by the other partners. And then there's what's called a limited partnership, where there are some people who actually engage in the business of operating day to day, what's going on. And then there are some people who put money in, but they're not engaged in the day-to-day business. They're really not engaged in the decision-making at all. They just put the money in, and as a result of their not being involved, their liability is limited up to the amount that they actually put into the business. So what 5.14 is saying is that RJOs can invest in limited partnerships, and they don't need to be worried about whether those partnerships are actually related to journalism purposes, because they won't be considered to be engaged in the business of the partnership as long as three things apply. Number one, they are a limited partner. So that means that they fall under that category in a limited partnership act. There are specific laws set out for limited partnerships. Each province has one, I believe, each one, at least in Ontario. Number two, an RJO and all non-arm's length entities. So there might be other organizations who are connected to the RJO because they're controlled by similar people, or they have overlapping people on the board, or something like that. Collectively, those entities can't have more than 20% stake in this partnership organization. And the RJO deals at arm's length with each general partner. So it can't be that the RJO is a limited partner, but is basically, it's all the same people as the general partner. So as long as they genuinely just put in the money, it's under 20%, and they are not involved in running the business, they won't be considered to be operating a business. It sounds a bit common sense when you put it like that, but legally it's not that obvious. So 5.15, an RJO that acquires and holds a partnership interest beyond these limits would be considered to be carrying on the business of the partnership. So even if they're not engaged on a day-to-day basis in the business, but they're invested in 21% in the partnership, that's no good. The exemption doesn't apply, and then that partnership needs to be considered related in order for the RJO to be following all the rules. So as I mentioned, the control of the RJO is all the rules here are designed to basically make sure that the RJO is not just there to promote somebody's personal views, a kind of dark money organization to promote the views as objective news, but it's really a shadowy figure in the background, usually a wealthy funder who's really calling the shots in what the newspaper or so on says. The members of an RJO's board of directors or its trustees must all deal with each other at arm's length. So it's not just that two can be, related to each other, and that as long as the others are independent, that's fine. No, they all have to be independent from each other to really hold each other to account. And there's a guide here that describes what does it mean to be at arm's length from each other, to really be considered to have separate interests for the purposes of tax law. And note, if people are just friends, they don't count as non-arm's length, even though they may share very similar interests. Nevertheless, legally speaking, they're not connected to each other. It's really related to people who are married or connected by blood or adoption, that kind of thing, or they're in business together. They share some kind of direct financial interest. An RJO may not accept gifts from any one source above the 20%. Again, nobody should have too much influence over the organization. And 5.22 and 5.23, the RJO has to be genuinely not-for-profit. And it can't even do things like, if you have a company car, yeah, sure, you can take the company car for the weekend. That's making the assets of the organization available to some individual. That's not acceptable either necessarily. So here we have this idea, what does primarily producing original news content means? Well, it's a kind of fact by fact or case by case determination, but generally speaking, it means at least 51%. And finally, we come to the last section, requirements for maintaining registration. So hurrah, you've qualified as an RJO, you start issuing tax receipts, you start applying for foundation funding, everything is going great. But then the CRA knocks on your door and they ask you, have you kept in compliance? Oh no, what does that mean, right? What should you have been doing all this time? Well, firstly, number one, filing an annual information return within 6 months after your fiscal year end. So every year, basically, you want to be filling out, giving the information to the government, because again, because you can issue tax receipts, you're implicitly subsidized by public funding. So the public is entitled to some information, and that's through these information returns. Keeping proper books and records that demonstrate that you continue to meet the requirements under the Act. So what does it mean to keep proper books and records? And so I'll approach this question from two sides. So on the one hand, it doesn't mean you have to keep absolutely every document that's ever been created in your organization. In terms of what does good record keeping mean for an organization, that actually turns out to be fairly similar. If anything, it's more robust than what the Income Tax Act requires. You want to be keeping those records that represent important enough decisions that it would actually affect the determination of whether or not you've complied with the Income Tax Act. So that means board meeting minutes. That means, board committee meeting minutes. It means financial statements and auditors reports and all these kinds of things that, in fact, for corporate law, you probably need to keep. But for the Income Tax Act, you need to keep these records with a specific eye towards, for example, if you're engaged in a new business, being able to show to an auditor if they come knocking on the door, yes, we are engaging in a business, and here's how it relates to journalism, and here was our decision-making process in engaging in this business, and so that the auditor can say, oh yes, their journalism purpose was first and foremost in their mind as they were engaged in this kind of decision making. Same thing when, for example, you're issuing tax receipts, you want to be keeping evidence of the tax receipts because you need to be able to show to the CRA, yeah, we issued the tax receipts properly, and also we can tell you no single donor is giving us more than 20%. So in order to be able to answer that question, you need to keep fairly detailed records of your finances, which is probably a good idea anyway. So that's a general kind of overview of books and records. There are other guidances on the CRA website to talk about, well, what do adequate books and records mean? Next, ensuring that any official donation receipt it issues meets the requirements of the Act. I described earlier how there's a section of the regulations you can look at to know what that looks like, what information has to appear on the tax receipt. There's also a lot of information for qualified donees, most specifically registered charities, about how to calculate what goes on the tax receipt. So for example, if somebody is giving you a donation of a software, like what do you call it? One of those design softwares, I don't know, InDesign, or they're giving you a newspaper press, one of those big machines, printing press, one of those big machines, right? So it can be pretty complicated to figure out exactly what that donation is worth. And so there's guidance available on the CRA website for okay, do you need to retain an expert? How do you justify the amount? It's not as simple as necessarily Googling, oh, what would it cost if we bought it outright? You need to ask questions like, well, what did it cost the donor to get this thing before they flipped it over to us, etc. So all that information is not mentioned in this guide, but it's on the CRA website, and it's something to keep in mind. And finally, the organization needs to ensure that it does not serve as a conduit by accepting a gift with the condition that it makes a gift to another person or entity. So you don't want to be in a situation where you're friendly with another journalistic group and they haven't gone through the registered journalism organization process. They don't like the paperwork and so on. So they say, our friends, you're an RJO, aren't you? Can't you just take the donation on our behalf and give us the money? And you issue the tax receipt? That's a big red flag. Don't do that. That's like a straight do not pass go straight to being deregistered kind of thing. Friends don't ask friends to issue tax receipts on their behalf kind of thing. So that is also be mindful about who the money is being used for. It should be used for your organization and your purposes and so on. And 5.26 is just a kind of, the CRA monitors on an ongoing basis. And if you disagree with what the CRA finds, you can appeal inside the CRA. If it disagrees with the appeals branch, then you can appeal the decision of the tax court to the tax court or the Federal Court of Appeal as applicable. And hopefully it does not come to that. So thanks so much for listening to this kind of experimental video in terms of figuring out whether or not it is helpful to go through CRA documents like this with people. I hope if you're interested in becoming a registered journalism organization, you found this helpful. If you have any questions, again, you can reach me at miller.benjamin@ymail.com. That's MILLER .BENJAMIN@ymail.com. That's Y as in Yahoo, ymail.com. Thanks so much for listening, and have a great journey to registered journalism status.